PepsiCo reported earnings this morning that beat estimates on Wall Street following that release. I caught up with the company's chief financial officer, Hugh Johnston, and asked him if this report symbolizes the beverage giant's turnaround.
Great start to the year. We feel awfully good about it. 12% EPS growth, 4.4% revenue growth, and a solid beat versus expectations. The nice part is it was very broad-based in terms of the results. Our Americas Foods business grew revenue 6%, and our Asia, Middle East, Africa business, more of an emerging markets business, grew 15%. China was particularly strong, 17% volume growth in beverages and 47% in our snacks business. I think the thing that we feel best about is we were able to do that and simultaneously improve margins as well. Margins were up about 80 basis points in the quarter. And a lot of what you see is the work that we've been doing, not just last year, but the last several years, in terms of expanding and building on our portfolio, whether it's geographies, anything from developed to emerging, products, anything from fun for you through to good for you, complementary food and beverage products, or even capabilities to operate in a two-speed world. So we feel great about the start to the year, and that's why we reaffirmed full year.
Hugh, on the margin expansion, what would you exactly attribute that to?
It's really a combination of two things. One, obviously, commodities are muted to some degree. But in addition to that, last year we launched a 3-year, $3 billion productivity program. This year's portion of that is about $900 million. And we're right on track, and we're seeing the benefits of that productivity. So the company is just operating more efficiently and more effectively, and it's showing through in the financial results.
You did mention, though, in the earnings report, a 7-cent hit from the devaluation in Venezuela. Was that more than you expected?
No, it was exactly in line with what we expected. We had communicated that on our Q4 call, and of course that's a non-core charge for us, but nonetheless, it came in exactly where we expected it to.
Do you expect further disruptions from there?
No, we really don't. Our business is running very smoothly down in Venezuela right now, and it's a good market for us, and we feel great about the way things are performing in Venezuela.
Hugh, on currencies, though, I mean, certainly they affect a big part of your portfolio. You've got the yen, which is rapidly declining. You've got the euro and instability there. How are you hedged against those currency fluctuations?
Yeah, so we hedge transactions. We don't hedge translation. Fortunately for PepsiCo, we do not have a very big business in Japan, so yen declines don't affect us quite as much. Our biggest exposures really are the Mexican peso, the pound, and then we're also exposed a bit in Eastern Europe as well. But by and large, currency basket overall is working well for us. It's about a 1-point drag on us for the year.
Okay. Marketing efforts, Hugh. I know that Pepsi has basically redoubled its efforts in marketing, investing in brands and Frito-Lay brands, but also Pepsi itself, the soft drinks brand. You were a sponsor in the Super Bowl. You've got a partnership with Beyonce. Is that paying off? Are you seeing the payoff now?
Yeah, we really are, in a couple of ways, I think. First, you see our brand equity scores improving, and if you watch television, certainly you're seeing a lot more PepsiCo advertising out there. But that's also translating through to the bottom line. The fact that we delivered 4.4% revenue growth, I think, is very much a tribute to the fact that we do have more and more effective and better advertising out, and consumers are obviously responding to it.
Hugh, what about payroll taxes and weather in the first quarter? We saw some of that hit your rival, Coca-Cola. How did that play into PepsiCo?
Yeah, certainly the weather overlap was a bit negative in the first quarter, but I think with our portfolio and with our broad geographic base, we were able to power through that pretty well. In terms of payroll taxes, I think it's a bit early to say on that. We're not obviously seeing much of an effect on it right now. It's wait and see, but I don't think it'll affect us very dramatically.
Well, people say that these automatic spending cuts that are taking place right now, you'll start to see those effects later on this year. Are you preparing for that? What are you expecting, your expectations with these spending cuts?
Yeah, we're certainly smart in terms of the way that we operate within an economy that has challenges. Right now, we still do see the U.S. economy gradually improving, but in terms of going forward, we'll continue to put offerings out there, anywhere from value offerings, so that if there are spending challenges, consumers can still access our products. And then for people who aren't challenged, we have a great line of premium products as well. So from that perspective, we're certainly ready for it. We're watchful for it, but so far the effects have been pretty muted.
Right, so you run the gamut, so to speak, in terms of trying to capture all the consumers. Hugh, just on a final point.
Exactly right.
There's been a lot of speculation that you, I'm sure, are aware of about whether or not PepsiCo might look into taking its Frito-Lay unit and merging it with Mondelez. There's lots of speculation on Wall Street about that. Can you address this?
You know, it's interesting. Certainly, we've seen some of the same speculation, but you'll understand we don't comment on press speculation and rumors and things like that. So I'm not sure I have much to add beyond what we've talked about in the past in terms of M&A.
Okay. And Hugh, just on a final note, I know PepsiCo has gone strongly into fitness, and in fact, I was sent one of your products the other day. You know, the Energy Chews. So you're going straight into fitness. You're trying to hit that market. How big of a market do you expect that to be, and how are you going to sort of spread that through the portfolio?
Oh, we think it's a huge market, and for our Gatorade business, it's one of the most credible brands that exists in the world of athletics and fitness. So, in fact, we've got a product for before exercise, the chews that you're talking about, which are absolutely terrific. And then we also have, in addition to regular Gatorade, we have a recovery product that's more protein-oriented that helps athletes recover more quickly. So that's a situation where we have this wonderfully credible brand, and we're now, through our R&D investments, building out a broader product portfolio. I think it's going to be an area of terrific growth for years and years to come.
Hugh, thank you very much. Appreciate you joining us.
Thank you, Betty.